It's been a pretty brutal start to the year.
Obviously, the worst start that China could have possibly had.
Second largest economy in the
Biggest
world.
weekly loss in over
Investors
4 years.
are losing confidence.
What's going on in China
People's
right
Bank
now?
of China.
Problems in China.
In China.
China.
Okay, here's an Econ 101 version of what's going on in China. The world's second biggest economy has suddenly gone from an engine of world economic growth to the caboose. True, it's still growing faster than the U.S., but it's a big drop from just a few years ago. And for markets, it's the change in the growth rate that matters more than the level of growth. Investments that made sense when China was growing 10% or more a year don't make sense when growth is below 7%. Understandably, foreign investors are getting cold feet and they're not putting nearly as much money into China. Meanwhile, residents of China are taking much more money out of the country. So how does all that affect the world? Slower growth means a smaller appetite for raw materials like oil and copper. Less money in China means the Chinese have less buying power, and China's neighbors will be among the most affected countries. For the U.S., American companies don't ship a lot of their goods to China, less than 1% of gross domestic product, so Americans are relatively insulated. American banks are also not highly exposed to China, in part because China hasn't let them very far in. Still, it wouldn't be a good thing for Western banks if companies that do business with China suffered losses and some of them defaulted on their loans. Growth worries have cratered the Chinese stock market. Chinese President Xi Jinping is struggling to stop the turmoil, but the Communist Party's fixes aren't working. That's a problem since ultimately, the only country that can fix China's problems is China itself.